And as you can see, we open and discuss the color guard and so on, and the timing indicators. And at this meeting, we talked about in the presentation side, we're reviewing investing through the year of 2018, the thoughts of 2019. We got into the Fibonacci basics and some creative uses. We got into handing out a prize to the UserGroup winner, who we run a little contest here that goes for a year. Everybody picks a stock, and one of our chaps won $50, which is just part of a little fun game we play. And we've also launched this year a new Canadian portfolio in Coburg. We've been running a U.S. portfolio that began back in January 2015. So they've been after me to launch a Canadian one, which we've launched effective the first trading day in January, and then we close off with questions. So that's our normal routine. This is a typical page that covers off what Stan has already done, talking about the color guards and the relative timing buy sell ratios and the trends showing on the main VectorVest page. And so on. And the other thing at the bottom I did mention was bottom fishing. Just a quick comment to see if anybody had done any on this particular market turn and comeback. Because if you jumped into jailbreak, example, on the U.S. market, when we had the prime wave up until around the 16th of January, you would have picked up about I think it was 20% growth, and it may have even been more than that. I don't remember, but I showed them a slide on it anyway, and everybody caught a few mouths open for sure, looking at what could have happened. So we went around the room and talked to everybody about 2018, and in general, people either broke even or lost a little bit of money, though the comeback at the front end of this year brought them back up. And so I said, well, let's look at the Dow, NASDAQ, S&P, and TSX and see what they did, just as a comparison. So when you look at this slide here, you see that the Dow actually finished up down about 6%. My numbering system there under the word Dow, the white in the bottom is 18 the year, 01 January, 02 the day, which seems to work well in our computer environment today. If we look at the S&P, again, it was down 6.5. If we look at the NASDAQ, it was down 4.35. And the Toronto market here, TSX, Toronto Stock Exchange, was down 11.65%. Pretty brutal. So overall, not that bad if you broke even. And so I flashed up the Canadian U.S. Coburg portfolio we run. And the second arrow down is where we finished off in 2018. We were up 13.2%, $30,248 gain. So not bad, not bad. We did pretty good. This is a graph of the overall portfolio, and actually it shows the current holdings this year too. So we started this in 2015 with 100,000, and you can see it's $263,846. So we've done pretty good. And the flats in the graph there, folks, are just where we go to cash. And in the event of a DEW down or a confirmed down, we go to cash. And we talked about the overall, I guess, results of the U.S. portfolio really doing pretty good compared to the other markets. We looked at 2019, and I'll just get through this quickly. Our group sort of felt that it was going to be a cautious year. One should watch the technicals, keep close stops, and proceed with caution. And of course, Robert Bloom, when he did the presentation last month, he was reasonably negative on the market. I am negative on the market too. I watch two key factors when I'm looking at the strength of the market, and one is a 50-day moving average. The other is a 200-day moving average. And when the 50-day moving average crosses over the 200 in a downward direction, that's called the death cross. And that's pretty serious. It takes a lot of movement to move something on a 50-day moving average. So let's look at the number of death crosses, certainly a few of them anyway. Now here's the NASDAQ. The red line is the 50-day moving average. The white line is the 200. And you can see here that we've got a death cross going on here that occurred back, I guess it looks pretty close to the third week of September. Here's your S&P. Same thing. Your Dow, same thing. And of course, the Toronto Stock Exchange, same thing, another death cross. This is what are the Canadian banks here. BMO, Bank of Montreal, another death cross. One of the other Canadian banks here. The reason I got the Canadian banks in, they're super stable. And yet here's another death cross. You can see with Royal, it's just smoking down. And this is weed canopy growth. For those that aren't aware, Canada has legalized marijuana a few months back, and so the stocks in this category have been pretty active. I think in the last 2 weeks they're up about 20%. But you can see with weed, it's turning down, and it hasn't crossed yet, but it's getting close, or it was back when I did the slides. So, as I said to the group, it's the number of death crosses that concern me, not a death cross here and there. That's no big deal. That can be an industry sector or even a specific stock problem. But when you get the number that are out there going on, that just makes you a bit cautious. So as Stan said, caution's the name of the game, and Dr. D too. Just keep your stocks tight and be careful. So let's talk about Fibonacci. This is a wonderful tool, and you're going to start to see a little bit on how important it is and how important it can be in trading stocks. So Fibonacci, who is he? Well, Fibonacci was an Italian mathematician, and his numbering series was developed while he was traveling around North America with his father, who was a customs officer. He took it back to Italy. It wasn't well accepted over there at the time, and he wrote a couple of books on it. Anyway, it found its way into the stock market calculations, and today it is really widely used. Now, Fibonacci's name was Leonardo Bogola, and Leonardo from Pisa, which was pretty common back then. They would use the first name in the town you were from. Funny enough, Fibonacci was his nickname. And just a genius in coming up with this amazing numbering series he has. Now, this is the series that I'm running across here, which is 0, 1, 1, 2, 3, 5, 8, and so on. And how he comes to the various numbers is if you add 0 and 1, you get 1. If you add 1 and 1, you get 2. If you add 2 and 3, you get 5. 5 and 8, 13. 8 and 13, 21. And this is where the series was developed from. Now, if we divide the numbers by the past, or you can see like 21 divided by 13, and I'm going to jump back to the previous slide because you can come down here to the 21, which is second row from the bottom at the end, 8 plus 13, 21. So if you take the 13 there and divide it into the 21, as they've done here, you can see you get a decimal, 1.6153. 34 divided by 21, 1.6190. 55 divided by 34, 1.6183, and so on. And they all divide in around close to the same, and the approximation nears the 1.6180, as they say here. And this is the basis of your 61.8, which I refer to as the 62 fib line. This is also the strongest of all the fib lines. This is known as the golden rule, and in fact relates in life to an awful lot of things. If you take the average tree, you will find that where the branches on the tree start to spread across from the away from the trunk and open up tends to be the 62.8 height of the tree, and that's where the branches spread apart. It applies with some flowers. It applies with humans. I believe the navel, or somewhere around that in the human body, is the 61.8 point. You can look at the nose on your face, and it relates to that, and so on. Anyway, that doesn't have anything to do with stock trading, so we'll mosey on here. Anyway, if you take two numbers away here and divide by 2 places, you find, and we've got some good examples, you get the 0.3820 line. And this is the second strongest fib line. So 13 divided by 34 gives you 38.382. If you take 21 and divide it by 55.3818, the next one, 34 divided by 89, 3820, and so on. And the approximation here boils down to about 0.382. And this is the basis of the 38.2 retracement line, which again, I tend to relate to and talk about as the 38 line. And at the bottom, the number, if you step 3 places away and you divide 13 by 55, you're getting the 23.63. 26 divided by 89, the 2359, and so on. And this is the basis of the 23% retracement level. So if we look at the Fibonacci levels that are most standard, we have the 23.6, 38.2, the 50%er, your 61.8, your 100, and I like to look at the 127 and the 1618. Now they can go up from there to higher numbers, and you can put those in as you wish, and we're going to show you how to do this and how to use the whole Fibonacci things. The next point down, traders use these Fibonacci levels to hedge, buy, and sell. This is super important today because they really do. let me tell you, they really, really do. And in fact, these numbers are built into algorithms for a lot of automation in the trading industry, and mixed in with buy sells of various stocks and volumes and so on. The automatic systems just trade independent of anybody putting hands on them. And this emphasizes even more the importance of Fibonacci, because you really, if you know where these levels are, you'll sometimes be able to circumvent some of this and know where to keep a good eye on it. Applying Fibonacci with VectorVest is easy. It's built into the program, and it can be modified to your heart's content. And we're going to look at that. Until you're really comfortable with Fibonacci, you're wise to use stochastics with it. It fortifies it, and if your stochastics are in the right position, it really, really gives you a much more solid base. So let's take a look at applying it here. Now, right at the top on the, and I'm going to come down here and get a little laser pointer here. So, great, I stepped back, yes. Anyway, I think everybody can see my my little red laser pointer there. The second tab over, mine happens to say freehand, but that's because I was in there drawing a freehand line the last time, so it stayed up there. But the second tab over is the tab where you're going to find Fibonacci, and if you click on the arrow, you'll get a drop-down menu with a number of choices in lines, and about halfway down, it'll say Fibonacci retracement, and that's where you want to click. Your menu will retract, and to set up a Fibonacci line, the top of the line is going to be your first click. So what you do is you set it up at, let's say, the high here, and you left click and hold your left mouse button down, draw it down to the low, and release the button. And there's your Fibonacci line, as you can see there. Now, what I've done to reaffirm this is I've drawn a vertical line in through here, and you can see that you really want to be at the top of the stochastics side of things. And I tend to look at a 30% from the top, 30% from the bottom, within that range for a really strong base. So the high hits the base, the low hits the base. So we've got a good stochastics line. Now, the interesting thing is, and we'll get into this in a minute, but it's just amazing the number of times that a stock will come down, and you can see here, if you follow my marker, how it comes down, and there's your 62 line, and even here it hits the 32, pushes through, and then pulls back, bounces off the 23, runs down, blows through there, hits the 50, pulls back, then eventually does get down, hit the 62, pulls back up, bounces off the 38, blows through, comes back down to the 50, it runs along there, back down and tests the 62, back up to the 30. It's just amazing how accurate this can be. And anyway, let's step to the next slide. And now there's all kinds of modifications you can do. If you put your mouse pointer on the line here, and you right-click, you will bring up this little sub-menu. And from here, you can change and put in whatever numbers you want, because numbers like the 23 you'll find when you first go to use this is not clicked here. So if you don't want the line to show, you can unclick it. If you want it to show, you can click it. You can change the color here. You can change the thickness of the line here. And you can make it dotted or solid or whatever by here. The color scheme that's set up here is my color scheme. It's what I like to use. I have the two key lines set up as yellow, the 62 being the strongest, the 38 being the second. Your 23 and your 76 as weaker lines, but still there, and the 50% in the center. Now, that's just me. Now, what you're not seeing is on the top side, I have the 127 and the 162. And you'll see those in a minute. Now, your two other little boxes down here, one's checked, one isn't. This extends the line right. The other one extends it left. You can click both boxes, and you got lines right across the page. You can click just the left box or the right box. In this case, I have the right box clicked. Once you get it set up the way you want it, you probably want to click on Advanced. And when you do, you will get the option to set this as your default setting. And I would click on Yes, because otherwise you're going to be setting it up every time you go in to do this. You'll have to set it up. So you might as well get it into default right away. Now, here's another example on market timing. We've done the same thing. We've hit the high here on the stochastics and the low here on the bottom. And again, here's your fib line set up. And I just happen to have a trend line in here that really doesn't have any relevance to what we're talking about. So there's an example on the Dow where we've set it up here. Now, you can use this as a trend line. If you want, you can click right on the top, right where the arrow is, and bring it right down here as I have where the arrow is here. Or you can move it because you can click on there again with your mouse left button, hold it down, and move the line. Now, we're going to be doing this, and I'll show you how to do this in a minute. But as you can see, again, if you look at Fibonacci, what does it do? Comes down from the high, hits the 38 line right away, bounces up to 23, blows through the 38, hits the 50, pulls back up to the 38, and comes back down not too far later to the 38, retests it again, back up, eventually blows through the 38. And it's just amazing how accurate this is. And I think some of these automated systems fortify that level of accuracy too. Here it is on the Toronto Stock Exchange, same idea. I've changed the direction here in an uptrend. I tend to use these as a trend line, so I will sometimes I lay it right against the stock peaks. And this is the weed stock that I mentioned, the marijuana stock, one of them. We've got a whole ton of them here, but this is one of them. And I'm again showing the Fibonacci lines as it comes down, hits the line, goes through, bounces along, goes down, consolidates along the line, back up again, bounces along the line. It's just amazing how accurate they are. It really is. One of our railways up here in Canada, Canadian National. Again, nice fib line, and you can see it testing it all the way through. Just testing it, running along the lines, and so on. And folks, you can pick any stock you want and put this puppy up there, and you're going to see it's a handy tool to have. Now listen, we're talking history so far. In other words, it's nice to go back and say, okay, we've drawn the line, and gee, look at how it hit there, and look at how it hit there. But this tool is a forward-looking tool, being more important for that than history. We can't change what happened in the past. We know what happened, and we can be very accurate about it. But it's what's going to happen in the future is where we tend to be or should be focusing, because this is where whether we're going to make money or not. And so by putting this line in here with your high at the top, now you can start to watch this, and a bearish engulfing candlestick here, right off it's falling, and away we go. Hits the 38, bounces through to the 50, pulls back, runs along the 23. Can't get back up to the top here, and blows through the 38, bounces along the 50 a little, blows through, bounces along the 62, eventually down to the 76, and again ends up pulling back up again. Low, low, low. Your trend change. Anyway, here's Royal Bank, another example of it. Now here's an example where I put the lines on in the back direction. So I'm picking up the highs here and the low there, and then I'm setting it up so that I'm following the trend going up here, and you can see, guess what, goes up to the 60, goes up to the 62, because this is now the base, goes up to the 62.
Don, if I can just interject here on this slide, this is an important one because a couple of people have asked the question, how do you determine where to start your Fibonacci retracement? And this one you very clearly have started when stochastics is in that upper level, and then you're going to the low where stochastics is very low. So I just thought it would be a good opportunity to mention it while it's fresh in the question box.
Okay, perfect. If I could step one slide back, you can see I'm doing it here, and I've drawn some vertical lines. So here's your stochastics at the top, and there's your high I'm using. And now in this case, I've got the VectorVest arrows on too. So you can say, well, you're cheating. You know where it is. Well, as you change the perspectives of the slides to a 3 month, 6 month, whatever, your highs and lows are going to change. The important thing is that, you want to be working, first of all, in the range where the stock is. There's no need doing Fibonacci way down here in the corner, because you do have a low here, you have a high there, and so you could set up a small one, and we're going to do that in a few minutes. If you work in the range the stock's going, and you work with the high and the low, it gives you a broader range over here on what potentially is going to happen with the stock. But we got some creative ways to do this, and some tricks we're going to show you. So yeah, just bear with me a bit. So this shows you some of the creative little ways you could, or at least we're going to show you some creative ways that you can use Fibonacci now. And I've come up with a little thing called a standard index move, or a standard regression, as Stan refers to it. And so here's an example here. Now I'm going to go live on VectorVest towards the end of this presentation. We'll draw some lines. You're going to see me move it around and how to do this. So we're going to get live in this. I tried to put as much on slides as I could because if you're just dealing with slides and you don't have the video component, you can forget some of this or not have it as a reference. If it's on a slide, then it's more of an easy lookup reference. So here's what I call a standard index move. And you got the stock down here at the bottom, and we've got a high here. And this looks like a pretty standard cycle in Magna here. And this is on the US market. This is Magna Corporation and the automotive, one of the sub-suppliers. And so this is where the standard index move starts. And we're, like I said, we're going to do this in a few minutes and show you how to do this. And I actually put the stochastics back on when I'll be setting this up. So I've got it back on, and I'll be live on VectorVest, so you'll see it. But that's what I'm calling as a standard index move. Now, the interesting thing is you can tilt this in the direction you want to identify the trend is up or down. In addition, you can move this. So you can put your mouse pointer right on the line, hold your left mouse button down, and move this. And watch what happens, because here's another base here. So if this is a standard move that this stock tends to take, why don't we take that standard move and move it to another location and see if it tells us anything? This is just, I'm just using here another example of drawing it on an index. So again, here's the idea of a standard index move on an index. It's created a high, it's created a low. We said, okay, let's call that a standard index move and let's play with it. So let's apply it to some practical uses. And so going back to Magna, I said here was the original where I set it up. So now let's move it to the second base. Now, what does this really tell you if you start to look at it? Well, it tells you that here's your 62 line right here. So the stock could go to there and pull back. It tells you here's your 38 line. It could do the same there. There's other lines. The movement in this particular cycle will probably go as high as here, if this is any indication of a standard move the stock would do. So from this base, guess what? Goes up to here. Here it is. And you can see it pulled up to the 30 or the 62, pulled back, bounced along the 38 here, got up, went over the top side a little bit, and pulled back. Then pulls back down here on the 78 and creates a new base. So let's call this the next base we go to. So we'll step one slide forward. Here's base 3. So I've moved the standard index move up here. Now, we're not seeing anything past this base right here when you move it. So we're saying, okay, it's probably going to go up to there. Well, guess what? It goes up to there and it pulls back. And when it tries to go up there again, we have a lower peak. So we could have a stock turn here because we got lower high, lower low, lower high, lower low. And sure enough, what does it do? Pulls back down here, retests the bottom, bounces along, blows through, in fact, gaps down. And so this would establish another base right here. And if when you see that happening, you could actually, I would actually go to the top here and do a reverse base as I'm showing here. Now I've reversed the standard index move. Here's the 127 line I made reference to. Here's the 162 line I made reference to. And these were set up on the little menu when which I showed you back a few slides ago. So here's what you can expect out of this move. And sure enough, what does it do? Comes down here, blows through, pulls back, wanders a little down through here, eventually blows down to the 127, but then pulls back, establishing another base right here. So once it goes past here, move your base from there down to there because it's established a new base. And here's the new base. And sure enough, where's the stock going? Potentially it's going down to here. And guess what? It runs right down there. Here's your 62 line, hits it, tests the 38 line here, then runs right along this base between here and the 62, and eventually blows through. Well, yeah, it did, but it's created a new base here. And so you can put your next base here if you wanted to, and what you'd find is the 128 line shows right here. It goes right down to there. This would be the standard move line. However, what I've done is I've just moved it down to the last position here and said, okay, looking forward to current, I've swung it around, so I've got the 127 and 162 lines in a forward movement. Our trend is now pulling back up, and sure enough, here's your 38 line, here's your 62 line, there's your 76 line, and there's where it was when I did this slide. So here's an example on, again, I took the index over here on the left-hand side and simply moved it down here and put it at the bottom as my potential base. And I'm looking at what the stock is potentially going to do. It's going to go to there. Sure, it went to there and it pulled back and it's dancing down in this area right now. This is one of the gold stocks in Canada that's doing really quite well, Kirkland Lake. And again, the standard index move, you can set it up. And again, we're going to do this in a minute, so just bear with me. Yep, sorry, Stan.
Don, just to let you know, we've got about 5 minutes, so you'll have to move to the program fairly soon.
Okay.
Where you can show that.
Yep, thank you. And that happens in the next slide, as you can see here along the bottom. So let me hit my escape key here and step over to VectorVest and go to my slides. Okay, so we'll blow this guy up. Now here's Magna. And now I happen to have a standard index move here, and we can just cancel that. Right click, delete, and I had support lines on there. So we're going to put those on in a minute, but let's show you how to set it up. Now I got stochastics back on here. So if you come over here and you take a look at this and you say, okay, I got a low right here. And I got a nice high right there. So let's take a run at testing this. So if I go under the horizontal line, as it indicates here, the second tab over, I run down here. Here's your Fibonacci retracement. I left click on it, and I want this trend to be up this particular time. So I can say, all right, I'll put my mouse pointer here, hold my mouse button, left button down, draw it down to there, and say, okay, there's my Fibonacci standard index move. Let's take a try at it and see how it works. Now, listen, that sounds a bit negative, but it isn't. All your indicators, whether they're 30-day moving averages, 60-day, whatever, everything is, it's a guide, and this is a guide. We may find in a few minutes that this might be to play with. We might have to adjust a little, but let's try it. Now, by holding my left pointer down on this, I can now move this. So here would be the next base. And it did consolidate along here. And in fact, blew up to the 127, then pulled back. So again, you can move it up to here. And you can say, okay, yeah, well, it got up here. And it did push through to the 127. And it came back down to the 62 almost. And now I'll show you how to turn this around. If I'm turning this around, because I got a downtrend here, a sneaky way to do it is I know where this base is right here. So I could take and put my pointer on there, run this up to a single thin line like that, come along to the other point here and bring it down and set it on here. And now I've changed the trend down, so I can use this. Now, again, this guy went through the 27. This is another base to use, bouncing right along the 127. Now, it's interesting to sometimes look at, okay, is this a new trend point? Well, if you look down here, you're really not at the bottom, are you? Not at the bottom. You know, here we're certainly at the top. And when you're in a reverse direction downtrend, you want your base is going to be at the top now. Okay. So I'm at the top, but this is not a bottom. And it's not a really solid bottom because the stochastics need to be down here to have a good solid bottom. And so I tend to, you can do two things. You can say, well, okay, let's try it. Let's come down here and play with it. And let's see what it does. Or you could say, there's a good bottom. That's a good bottom right there because it's good and high. So let's set our next bottom up there. And you can see what happened here is it came down and it blew through only to pull back and bounce right along what is the standard move. And this is a good bottom here because again, I'm up here and yeah, it blew through and ran right along that damn line. And then we got a trend change. So if you want to adjust that trend change, again, I get on where I know here and I run this up to a thin line. And if you run along the line, you'll find your other little circle will appear. And now we can go to a trend change, and I'm setting my line up here on it. Now I can pick it up and move it over to here and say, okay, that's probably where it's going. And sure enough, ran up there and waffled right along, but it formed another base. Is that a good base? No, it's not. Because now we're going up. We're on an uptrend. We need a good solid lower base. And so I would tend to stay on here and work with my 127, 161. Stochastics will curl it'll come down and form another base. And when it does, then I'd be moving my standard index move to the next step. And
Don, just to let you know, we are actually right out of time. A couple of comments. Steve says, wow, I get it. So that's pretty cool. And Robert says, absolutely excellent presentation. And Werner says, fascinating. I think some people, if you're new to Fibonacci, you will have to review the replay and kind of take some steps and check it out with the stocks that you trade. I think will be very helpful to you. But this has been excellent. I was just going to get you to quickly show how you change style, but I'll do that in my own program, Dawn, when I get there. Okay. I thought we might just take a minute. There was just a couple of questions that came in. I think you've answered the key ones, especially about where you start your retracement and where you end using the stochastics levels. And then at some point you were using the 20 or the 30 and 70 on stochastics to set your levels, or do you usually use the 20 and 80, which is the normal?
No, I tend to, I set my stochastic lines at 20, Stan. So they're 20 and 80, but with Fibonacci, the trend seems to be 30 and 70. So if it gets, and that's for a good solid base. If your stochastics are down lower than that or up higher than that, it just makes the Fibonacci positioning of the line a stronger line. Now, what I haven't had a chance to show in 35 minutes, pretty quick, but you can integrate your resistance and support lines with this. And if you get support resistance lines coming in around the 62, the 38, oh my God, you've got some super strong resistance points there, and just great identifiers. And as I say here, it's another tool in the bag. It really is. So, all
right. Well, Don, thank you so much. More great comments coming in and appreciation for your presentation. Rosario says, wow, other layers added to the basic Fibonacci fib. There are some others in there, Fayez, you're right, the arc and time zone, the fan. That's for another day.
Yes, it is.
With that, I want to say thank you so much, Don. And if there's other questions that come in, I will certainly pass them along to you if that's all right.
Yeah, by all means, I'm happy to answer them. We all got email and everything else, so sure. Yeah, not a problem.
And for everyone, really hope you review the replay and you can pause it and advance it and rewind it and go through some of Don's, because like Steve and Robert and now quite a few others, they're indicating they just got a really great understanding of how to use those retracements for better entries and better support and resistance. So again, thank you very much, Don. And I'm going to ask for the controls back now and get my slides back up.
Not a problem.
I just got to do this. And let's just see what happens.
Okay. Well, thank you, Stan. It's been my pleasure. And we'll be talking. And any questions anyone has, by all means, send them through and I'll handle them. Sure.
All right. Thank you so much. Let me make sure I've got my screen. I think I do. Let's just see. There we go.
Yeah, I think you're.
I'm on it. Let's see.
Or is that mine?
That's yours, I still think. Oh, no, I'm on mine. Okay.
Okay.
All right. Thank you again.
All righty. Thanks.
All right. All right. I just got to go here. And okay. All right. So, folks, what a great presentation. I really appreciate that. We're going to take some time, and we may go over a little bit. by about 5 minutes, but hopefully that's all right with everyone. Again, this is another technical study, and it's how to make money with moving averages. And in this forum, we've done a lot of work with moving averages. I understand that, but we have a lot of new people as well, and always some new ideas about how to use the moving averages that I hope you will find very helpful. And when I do get to the program, I will just kind of show what Don was going to show in the live program, and that's just how to change those colors on your Fibonacci and the style. So just remind me if I forget about that. Don W was right to the end of his slides, so I don't think there were too many missing slides. You got right to the end, so don't worry about that, and you will get the slides in a PDF tomorrow. All right, so let's move on here. This is how to make money with moving averages. And we'll basically cover what is a moving average, how they're calculated, the purpose of moving averages, maybe a couple of secrets to using them that I think you will find new and useful. And then again, the most popular moving averages. And then I've done a search for Canada and the US, and I'm sure I could do one for any of the other countries, and you can too. Just follow the setups there and the volumes that work very well. This is if you have the technical Pro Trader, and I know a lot of you do if you have real time or you made the lifetime purchase of Pro Trader. So I always like to give you some information that'll help you take advantage and use the tool that you have purchased. Otherwise, you look at the graphs and you can find those setups pretty easily. All right, so what is a moving average? Let me ask you this. Is it a trend or momentum indicator? Is it a trend or momentum indicator? Tom says he's lost sound. Anybody? Suzanne says it's trend. Sandy says it's momentum. Homer says momentum, and then we've got a whole bunch of trends, a couple of momentums again. I think Pessy might be the closest here. Is it Pessy? They're going by pretty quick. No, Michael says they can be both. And yeah, and Brian says both. So really, moving average is actually designed as a trend indicator. And what I'm going to show you and explain to you is that you can also use it as a bit of a momentum indicator just by judging the slope of the moving average. And I think that's an overlooked, and I've looked at lots of books on moving averages, and nobody really talks about the slope and how important it is. So I just want to kind of not just talk about it, but actually kind of show you why the slope is important as well. But most of you identified this as a trend indicator, and if you look at Volkowski and other books on technical studies, they will identify moving averages as a trend indicator. But it's one of the most popular. It basically tells you the average price of a security over a certain time frame that you specify, how many periods. It works on intraday, weekly, and daily graphs. And the main purpose is to smooth price action and make it easier to spot trends. And so it's especially helpful in volatile markets where you're more trading, getting in and getting out. Moving averages on price complement other technical studies such as RT, those fib retracements that Don did an excellent job in presenting, stochastics, for example. Again, if you missed my stochastics video, make sure you say send video or something like that. Send stochastics. So what is a moving average? Moving average provide unbiased levels of support and resistance where you can expect some sort of reaction, either consolidation, a bounce, or a breakdown when the slope starts to roll over and then turn down. So these should be considered zones rather than exact levels. So, you know, you need to give that a cushion and not use them as absolute numbers. And the levels of support and resistance can help you determine target entry points, but also know where to get out. And we'll kind of take a look at a few examples. Take your profits or minimize your losses using a moving average. And then again, you can use moving averages for entries and exits. And what it kind of does for you as an investor or trader, it gives you some discipline in your trading and provides consistency. So it can be another tool in your trading plan that says, you know, I'm going to enter only when the moving average is above, or price is above this certain moving average, whether it's the 200, the 100, the 50, the 40, whatever it is. It gives you discipline and will provide some consistency in your results. So here's a quick primer on how moving averages are calculated. I think most of you are aware of this, but simple moving average, or the SMA, or most often it's just referred to as the moving average, MA, assigns equal weighting to all price values in the defined period. So for example, if you had the following series of price data points during a 5-day period, the 10, 12, 13, 14, 16, don't we all wish they would just be that even all the time? But of course they aren't. But these are 5 data points. The simple moving average calculation looks like this. You add them all together and divide by 5, and you have a moving average of 13. The next day, the first period is dropped, and then you have the next 5 days of data points, and that total is 68. And now the simple moving average is 14. It actually went up, even though we dropped a moving average. So that is the basic calculation. So how are moving averages calculated again? The exponential moving average, the EMA, so it seems to always be referred to as the EMA, whereas the simple moving average is often shortened to the MA. But the EMA gives a heavier weighting to the recent prices, increasing sensitivity to recent price changes and making it more reactive than the simple moving averages. So here you see it plotted. You can see on a shorter time frame, there's not a big difference between the EMA and the MA. This is an 8 EMA and in orange, and 8 EMA in blue, or 8 moving average in blue. And you can see the EMA is just a little bit more reactive to the price change. You can see here it drops quicker when price starts to move down. And then on a longer moving average, the change is a bit more pronounced, or the difference is a bit more pronounced, with the EMA in green reacting just a little bit quicker, especially here to the downside. You can see that there. So traders and investors with a longer term perspective prefer the EMAs, since there's less lag and you can avoid distortions from information that is no longer relevant, or may no longer be relevant. These are some popular moving averages. Of course, VectorVest uses the 40 simple moving average. Institutions use the 50, 100, and 200 quite often. They'll also use the 20 in there as well. And again, the 100 simple moving average provides that buffer or support between the 50 and the 200. And if it does not hold a support, there's a probability that the 200 simple moving average is the next stop. And so there's that death cross that Don was speaking about. ADMA, very popular as a trigger line. Stephen Bigelow refers to it as his trigger line. It's a very useful and commonly used level, which is a self-fulfilling prophecy with it, right? If a lot of investors are using it. And then in Canada, Petra has really popularized using the 3 EMA with the 8 EMA, and you can pair it up with the 40 simple moving average for slower, longer term time frames. And then there's the 20 and the 40 on a weekly graph, especially. And the 3 and 8, by the way, works really well on a weekly graph as well for your retirement-minded positions. But David Paul, our VectorVest UK managing director in a previous international forum, talked about his use of the 20 and the 40 simple moving averages on a weekly graph. And especially with high relative safety in CI stocks and rising earnings, this can be a terrific graph technique, a buy signal when price falls below the 20 and finds support at the 40. But David calls this the value zone method, and it's pretty terrific. So let's look at some examples here pretty quickly anyway. So we want to buy stocks that are in a strong rising trend where price is above your moving averages and the moving averages are rising. Buy stocks that are trading above the 8, 20, 40, 200 period simple moving averages, and the 8 EMA is rising rapidly. That's that slope that we're concerned about. The 8 EMA has crossed above the 40 and both are starting to rise. Once in motion, you'll notice the slope of the 20 moving average should start to tick up and eventually should have a slope of 45 degrees or higher. Umer, I don't use the weighted moving average except with the star search. But you're right. That's another tool in our VectorVest program is the weighted moving average. All right. So we want to favor stocks where RT and especially the 40 moving average of RT are rising. This is the Midas touch, and this is something in your VectorVest program that nobody else has. And I'm going to show you how valuable it can be to put you on the right side of your trades and put the probability in your favor, even when you're using some of these other sort of universal moving averages. So that's our trade with the trend, trader's tip. So here's an ideal setup. This is Kirkland Lake, and a lot of Canadian investors have been into Kirkland Lake. It's also traded or interlisted in the US exchange. It's a miner for gold and particularly gold, I guess. But here it is. We've got the EMA 8 in green. We've got the 20 simple moving average in blue, the 40 moving average in turquoise here, the 200 in orange in dots, and the EMA 8 is in green as well. And then down below, we've got the RT as a line, and then we've got the 40 moving average of RT as an area. And you can see how effective it is. As price comes along, we notice the 40 moving average of RT is starting to build strength. RT is starting to cross above 1, and then we have price crossing above the 8 EMA moving average. It's above the 40 EMA, or moving average, I should say, and above the 20, but it takes a little bit longer for the cross of the 20 and the 40. If you wait for that, that's okay, but this is an early indication. RT is trending higher, the moving average of RT trending higher. It's a safe entry point. The VectorVest buy signal, you can see them all along the top, Ken, and you can see you could have gotten in back here. It was a little early from the standpoint of the 40-day moving average of RT, but if you got in back there, you had a nice rally up to this point, and you can see price did cross above the 8 EMA right here, and that's precisely the angle we like. You just might have had to get out a little bit earlier if you were trading, or just hang in there as it came back down, tested the 40-day and tested the 200-day. And this is what I mean by not using these moving averages as absolute support levels. They are just like zones. And you can see it did drop below the 40 level here a little bit and then really ramped up. Patrick says, for his perspective, he suggests buying fundamentally strong stocks, those high relative safety stocks, having support below the 200 MA deserve strong consideration. Yeah, and you know what? If the 40 moving average of RT is rising and RT itself is rising, I agree with you. You can buy a little bit earlier. Absolutely. But here's high probability buy points with Chronos. You can set your trailing stop after purchase or consider selling when the 8 EMA and the 20 SMA roll over. But you want to avoid buying here when the 40 moving average of RT is starting to fall and fall fairly strongly. You might get a signal here you got a signal where price crossed above the 8 EMA. It was below the 20 and the 40, but you know, you might be tempted to jump in there, and it worked out all right in this case, but quite often it does not. So this, you want to avoid buying when this RT40 is moving lower. Here's a fairly aggressive buy when price crossed above the 8 EMA. RT was certainly hitting higher highs, so that would be strong, a strong entry point. The 40 moving average of RT had at least flattened out, so that would be an aggressive buy, and you did make some money here. But the safer buy is when RT40 moving average is also crossing above 1. RT is beginning to rise again. Price has crossed, you know, your moving averages are sloping up. That's a really strong, safe buy. Kamel says Cron and KL aren't extended away from the 40 MA. It did get extended away here, but you'll notice, Kamel, it did come back to the 40 back here. And then, you know, it did get above the 20 here. And you need to pay attention to the slope of the moving averages. This is the slope that we're looking for, an upward trending slope, 40 to 45 degrees or higher, and the 40 moving average up as well. So that's not too extended in my books. This was getting quite extended away from the 40. Good point. Good point. How about now? He says, yeah, it's getting a little bit extended away now. So there's always a last buying opportunity, right? But the way these moving averages, the 8 and the 20 days in blue here are moving up, and the 40, my guess is it's got power to move up a little bit higher, but it could consolidate here, allow those moving averages to catch up, and that would be a good point. And Barry says lots of tall wicks lately, so lots of shadows on the upper side. So just be a little bit cautious with it, and that sort of reflects what we're saying about the overall market as well. So here's Cron. This one I just wanted to show because Steve Chappell did such an excellent presentation on Profit Locker Pro. When I talk about setting a trailing stop below that 8-day moving average or the 20 or the 40, the Profit Locker does that and allows you to trade it automatically or automated trading. And you can see on the left at the top here how the stop price initially gives it that wide berth to move up, but then tightens as it gets closer to your target price. So it's pretty cool. Rising 40 moving average often serves as support and provides another buying level. So you can see as price comes down to the 40, comes down to the 40, down to the 40, those are great buying opportunities. But here it's moving up quite slowly at a nice orderly 45-degree angle. And then it accelerates and we see the angle and the slope increase. And eventually that slope really gets extended away and it will come back a little bit as it did here. And the RT moving average starts to slide. The RT here actually fell below the 40 moving average of RT, another warning sign. And of course, the price falling below the 40 is one of VectorVest's key warning signs of potential trouble ahead. Ruben, you have RT in your program, in your VectorVest program. You don't have it in Thinkorswim or any other service. It's one of the features or tools that makes VectorVest unique. And most traders and even long-term investors will tell you RT is their best friend. This works equally as well on our other markets. Here's Australia. And again, it's that slope of the 20, the slope of the 40 that is really key here, and the slope of the 40 moving average of RT. Ruben, if you don't have VectorVest for now, we've got a trial offer for you right at the end. Try it out for 30 days. I know you're going to love it. Here's a weekly graph with Dr. Paul's value zone. Again, the slope of the 20 and 40 moving averages keep you in the trend. And then as Dr. Paul described, the dips below the 20 moving average, simple moving average into the gap between the 20 and the 40 presents a buying opportunity, and it can fall a little bit lower. Just buy when it comes back up. Make sure the price is moving higher when you buy, and it keeps you into these good solid dividend payers much longer. The slope of the moving averages keep you in, and they can help get you out. So here the slope of the moving averages is generally in a nice orderly uptrend, and then you'll see the 20-day here and the 8 EMA start to roll over. That's a warning sign, and it crosses below the 40, and you can take your profit. And when the MAs finally cross, consider selling, or you can wait for the sell rating from VectorVest. Okay. Here's a search that works really well to find these. You do need the Pro Trader. And it's just, let me just go into the program here. It doesn't matter if I go Canada, US, pretty similar. So for example, here is Canada. And if you have Pro Trader, you can go to the Pro Trader folder and see a lot of the same searches in here, and you can modify them. So with this one, I've got stock price. You go stocks, price volume, price split adjusted is what you need. That activates the operator for our technical studies under Pro Trader, and we're using the EMA in this case. And then we come to the value, and we're using 1. That's a proxy for the current price. And we want the EMA above the 8 EMA. So you've got all your choices here. And we want it to have crossed in the past 2 days. 1 day is okay, but you get more choices or selection with 2. So then we run the search, and these are the shares that come up. There's more than this. I didn't actually run them all. You could certainly do them all. I'm not sure how many you would get. Do a quick test. So you would get 15 in this case. Some losers down at the bottom, but your top ones, pretty darn good. And I'm not sure they would be losers. They might just be shorter term trades. Okay. And then the big difference, and then again here, what makes this so effective, I believe, is the stock 40-day moving average. So stocks, in this case, you want to come to VectorVest Fields, because that's where VectorVest has this 40-day moving average of RT already built in. It's a little lower down in the US search. And then you use greater than as your operator. And then in the value, you'll want to use the custom date and value. And I've just used, again, 2 days ago, greater than stocks, VectorVest Fields, and use the 40-day moving average of RT. Click OK, and then you've got your study. All right, so that's how you set that all up. And again, the US, the biggest difference, a little bit on the indexes, but more volume. I am sorting in the US by value, safety, timing. And in Canada, in my testing, the relative safety descending sort worked the best. Just more consistent. But this gave us bigger boost in the US. All right. Any questions? I know I've gone a few minutes over, but I thought this would be a good primer on moving averages. SG, if you have a question for Dawn, you'll just need to chat it in here, and I'll make sure Dawn gets it for you. Thank you, Steve. Steve says, awesome presentation. Another nice one to save for the library for further review. That's great. Terry says, love these Saturdays. I do too. And it's really great when we get the participation from our user group leaders like Dawn and other members as well. It's pretty fantastic. We really benefit from that. David is asking if these work on the UK markets. David, I didn't particularly test them. I think you know that The premise works because of David Paul's work, but by all means, test out the search criteria and see if it'll work for you as well. Thank you, Margaret. Appreciate that. And Kamel says we should make these weekly. I thought this one came up rather quick after January, and March is going to be March 2nd. We'll have Ed from our Atlanta group giving us an update on the thematic ETFs, and I know will be fantastic. So you'll want to make sure you want to be listening for that one. Yep, Gary, with those Pro Trader studies, you can search for MACD crosses. There's a terrific one in there for stochastics as well. Oh, I got to go to the. Okay, so there's Pro Traders. So there's the MACD crossovers. And then this is a particularly strong stochastics. Oops, this one is a strong stochastics as well. Am I not showing the slides on that? Thought so. Oh, there we go. No showing the slides? Oh, yeah, I got to slide this over. Sorry about that. So there's the Pro Trader folder. It's got about 32 searches in there. MACD is up at the top here. Crossover long, and then some special ones involving EMAs, and then stochastics as well. Thank you. Ruben, Pro Trader, it certainly is a benefit to traders, but even long-term investors, you know, you want to be able to get in at a good point in your trade, and so it can certainly save you time in finding those good entry points. Is really a strong use of it. And then someone was asking about the trial. If you're new to VectorVest, here's a $9.95 offer for try it out for 30 days. Call 1-888-658-7638 and make sure you ask to get Pro Trader with your trial, and then just diarize the date and make sure you cancel if you don't want to continue with it. But if it works for you and it pays for itself, then you want to stay with it. Yeah, and Blair, great point. You can always call support, 1-888-658-7638 if you have another question about the fib retracement and how that works. I was going to show very, very quickly just very quickly, for those of you, Don was going to show this, and I know I was rushing him a bit at the end, but on the fib retracement, you just right-click in any one of these circles, and there's your style button. So now you can select which levels you want to show here, and you click in here to change your colors as usual. You can use dash, solid, or dotted lines, of course. And then in the advanced, you can set as your default if you wish. Meant to show that. Thank you. Jacques says in Europe, better to use RS instead of VST. Thank you, Jacques. Appreciate that. All right. Folks, we have covered a lot of ground. I really want to say thank you again to Don Wellwood, our Coburg user group leader. That was an amazing presentation. And I know when you, for those who are newer to fib retracements, when you view the replay, take your time, and the index move, I think you're going to find a pretty special tool in there, in addition to just the rules for starting and ending your indices. Technical studies, by the way, someone is asking under add parameter, there's all your technical studies, and there's your stochastics as well. Okay, and you can change, right-click, change the colors. We typically like to have green and red. Click it again. And you've got green and red, graph layouts, save and modify, add new layout, give it a layout name, and you're good to go. All right. So fib is, there's a strong relationship between support and resistance, Ruben. You'll find that in there. All right. Thanks, everyone. Wonderful to have you all with us. Thanks very much to Manny. He's answered a ton of questions in the background for us all. And I hope you got a lot out of this one again. And we'll look forward to doing some more on technical studies in future presentations. Thank you, Tom. Appreciate that. And everyone, very kind comments about Don's presentation. Mel says, great job, Stan and Don. My homework for next week is set. Awesome. Well, make sure you relax a little bit in between, especially on the weekend. Thanks, everyone, and take care. And yes, we will see as many of you as possible at our Tuesday Q&A. And if you have questions, we can certainly answer them there. Thanks again, everyone.